Hi, and welcome to Market Conversation. Just want to do a quick video on Ggpi. This stock has been getting a lot of attention. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. I also have a Discord Patreon that I'm trying to grow. So if you guys want to join a very small community, come check it out. The stock closed at $12.81 on Friday, and it ran up to $14.45 after hours. There was a huge amount of volume. On Friday, take a look at this daily chart. There was a volume of 42.52 million. The day before only had volume of 6.5 million. The day before that was only 13.77 million. So this is a SPAC that's going to merge with Polestar. Take a look. There is a article here by Seeking Alpha. Ggpi is extremely undervalued and years ahead of other EV startups. $35 price target. So we have summary here. Ggpi is due to merge with Polestar next year. Polestar has delivered over 10,000 cars last year alone and plans to 300% this in 2022. Its valuation is around 5 times less than its peers, RIVN, and half the price of Lucid. Polestar was founded in 2017 by Volvo Group in Greeley. Top Gear reviewed the Polestar in 2021, stating one of the most complete electric cars money can buy. Superb build quality and decent to drive. A lot of chatter on Reddit and StockTwits. If the momentum continues next week, we can easily see this going to $17, even $20. So I want to get in, and I do not want to miss this ride up, just because I have missed all the other ones, including DY. Monday morning, what I'm going to do is I'm going to buy call options. I know I said this many times in the past that call options are very risky, especially when the implied volatility is over 100%. But I'm willing to risk $1,000 on some call options because I do feel that this stock will continue to rise, especially there's so much attention on electric vehicle stocks right now. If we take a look at RIVN, this stock IPO last week, and it went from low of 95.20 all the way to a high of 135.20. So if we take a look at these call options, they only have monthly call options. If we take a look at the volume, the 1250 had a volume of 40,000 and the 15 has 16,000. We also have a high volume traded for the 2250. What I'm going to do is buy the out of the money call options. I'm pretty sure that these are going to be a little bit more since the price actually went up. What I'm going to do, instead of going for November 19th, I'm going to go for the December 17th. That way, if the stock doesn't reach my strike price, at least I'll have another month for it to reach my strike price. So most likely, the 2250 will go up to at least maybe 85. So let's see how much I can afford with my $1,000 if it does go to 85 on Monday. So I can afford about 11 contracts. So that's all I'm risking is $1,000 on 11 contracts. And another way that we can play this is by selling options. This is what I typically do. But the reason why I'm not selling options because profit is limited. It's 0.70, which isn't bad at all. So we have to put up the collateral, which is $1,250 to make $70. The reason why I'm going to buy call options because I do feel that this stock is going to continue to go up. Don't know how high, but I'm taking a risk on buying call options for the coming months. Another way that you guys can play this is by buying call debit spread. It's another way if you're bullish on the stock. So we'll take a look at the 21 January 2022. At least this way you'll have plenty of time. So we're going to buy the 15 strike, which right now is $1.60, and then we're going to sell the 2250 strike. So our cost will only be $70, and we can make a max profit of $680, which isn't bad at all. So if you're limited on funds. So that's pretty much it. Let me know if you're planning to buy shares of Ggpi or call options and what your price target is for the coming months. And hope to see you guys in the
electric
Discord.
vehicle company, I should say, Polestar combining with Gores Guggenheim. It's a SPAC created by affiliates of the Gores Group and Guggenheim Capital. Polestar will become a publicly traded company right here on the NASDAQ. The transaction, including about $800 million in cash from Gores Guggenheim, and implies a $20 billion enterprise value for Polestar. Joining us right now, first on CNBC, is Alec Gores, founder, chairman, and CEO of the Gores Group, and Thomas Inglot. He's the CEO of Polestar. Good morning to both of you. Alec, it's great to see you again. We just saw each other in person, actually, last week at that SALT conference. Tell us about this transaction, how you found Polestar, and why you decided that this was the deal.
Good morning, Andrew. Nice to see you this morning, and thanks for having me. Well, look, Polestar, we've been looking at it now since the beginning of the year. It's a very unique company. It's a real unicorn, and we're super excited about it. And as Thomas will talk about Polestar, you'll see it's a very, very special company.
Hey, Thomas, let's talk about the company and the company's future. But specifically, I'm curious, why do a SPAC rather than go public?
Yeah, good morning to the studio. Well, for us, it's important to have that support for our growth plan for the next 3 years. This is all about speed. This is all about an efficient way and flexible way. And of course, finding the right partner with Alec and his team, having the trust that they are the people that have the experience to do this successfully. All this led us to take this option, the SPAC option, as the favorite one.
For those who are unfamiliar, tell us exactly what Polestar does, so everybody knows.
Yeah, right. We are an electric car company. Here, the one and only startup in Europe, born in Sweden, our headquarters here. We have 2 cars on the road today. The Polestar 2 is selling in the US and worldwide. And obviously, Scandinavian design, sustainability as a core of our company. And we will be bringing out 3 more cars next year, 23, 24, so 3 years, 3 cars. This is what we have here in the design studios ready to go.
So you were backed by Volvo. One of the things that I've always been curious about is when you look out 5 or 10 years from now, do you think that the majority of new cars on the road are going to be built by effectively new companies like yours, or a Tesla or the like, or the traditional manufacturers who are going to try to transition to electric?
Well, obviously, this is a period of big change in the car industry. And what seemed to be impossible a decade ago, suddenly it's possible because there are so many things changing. It's not only about electrification, the whole journey towards CO2-free mobility, direct consumer business, really being digitally connected. This is such a change. It enables newcomers to come and play an important role. Obviously, the OEMs will be catching up. They will go all electric, but it is so much more cumbersome to do that with an established legacy system where you still have to take care of your ICE train range. This is, of course, where a startup and brand new company can accelerate much faster.